ARMs are back. That's right. Adjustable rate mortgages are back. We're going to talk about the top 3 things you have to know about an ARM if you're considering it for a home purchase in 2022, right after this. Hey there, it's Ryan Skaggs. This is the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage, real estate, and interest rates. And unfortunately, we're going to talk about those rising interest rates yet again. First of all, check out the video I did last week talking about the Fed meeting. They did raise interest rates. We have seen interest rates rise once again. The average 30-year fixed is 5.30% according to Freddie Mac. You can check out the link below in the video there. It's got the survey from Freddie Mac that gives you a weekly survey from week to week and historical on where rates have been. While you're down there, hit that like button, hit that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. So we're talking about ARMs, or ARM, adjustable rate mortgage. So why are they coming back? Why are they becoming popular again? Well, let's start. Going back to, say, financial crisis 2008, 2009, ARMs were very exotic, meaning they had all kinds of different policies. You could have balloons and this and that, a little bit scary, a lot of small print. All of that is now regulated by the government. They're extremely standardized. So as long as you understand the basics of the ARM, there's nothing to be scared of. Now, why are people interested in them? So that's one of those tips that we're going to talk about today. And the reason why people are interested in them is that with rising interest rates, it gives you an opportunity to get a lower rate. Instead of locking in for, say, a full 30-year fixed, you could lock in for, say, 7 years with the understanding that it could adjust. So that is my tip number 1. Understand when the rate could adjust and what would adjust to. You need to speak with your loan officer, understand what the product and program is and those specifics behind it, but it's going to be locked in for a period of time. Let's imagine you buy a car and you've got a warranty for 5 years, but you sell the car after 3. Well, 2 of those years, you didn't need the warranty, right? You already sold the car. There's no use for it. So if you did, let's say, a 7-year ARM, you want to understand your time horizon, and you sold that property after 5 years, then you would have had a fixed rate the entire time. There'd be no adjustment. So understand what that fixed rate of time is. Now, one of those tips I kind of just mentioned as well is that why people are doing them. And people are turning to them because rates are going into the 5s and potentially the 6s now, is that what opportunity do I have to get that rate lower and have that lower monthly payment? So that would be kind of tip number 2, is that consider your time horizon, and that way you can actually save on the interest rate. And the last one is understand what the ARM adjustment is based on. Okay, so that's the benchmark in lending that we would call. What's the benchmark rate? What is it? What has it gone up or down in the past? You know, if it adjusted today, what would it be? What about a year ago? What about 5 years ago? Just understand what that chart looks like and what it would adjust to and up or down from, and that will help you make a more informed decision. ARMs as a whole are adjustable rate mortgages. There'd be 3 years, 5 years, 7 years, 10 years. I've got an awesome product that's a 15-year ARM. Now, you've got to apply to be credit qualified and understand if you would be eligible for it, but there is all kinds of different programs that are available. So talk to an educated, knowledgeable loan officer because it could be a very good option for you. So that is everything about ARMs. Again, thank you so much for tuning in. If you haven't done so yet, hit that like button, hit that subscribe, click that bell icon to be notified, and we'll see each other again very, very soon.